Assalamualaikum warahmatullahi wabarakatuh. I would like to talk about company's background of Versatile Creative Berhad. Versatile Creative Berhad, founded in 1986 and listed on Bursa Malaysia, is a diversified company with over 25 years of expertise in paper and plastic packaging and has expanded into grocery trading and retail through supermarket, hypermarket and online platform. So next, I will explain about MAC2204G. MAC2204G is a financial reporting standard that tells company how to report information about their different business segment. In simple terms, it helps investors see how each part of the company is performing. Under MAC2204G, company must report segment based on how management actually run the business, meaning the same way the CEO and managers monitor results. This makes the information more realistic, relevant, and easier for users to understand. Overall, MAC2204G improves transparency so investors can make better decisions.
Next, let's look into the CODM. The Chief Operating Decision Maker or CODM is the person or group who makes important decisions about a company's operations. They are responsible for allocating resources and evaluating performance of each segment. The CODM isn't always the CEO. It can be CFO, COO, Managing Director or even Board of Directors, depending on who actually makes the operational and strategic decisions.
For this section, I would like to briefly introduce the Chief Operating Decision Makers or CODM. On the left is the leadership figure representing Versatile Creative Berhad, which is our group selected company. He serves as the chairman. On the right, we have a leadership example from Genting Malaysia, but CODM here is shown in the position of President and Executive Director. In short, this section shows how different companies have different titles as their CODM, but both hold the responsibility of making major business decisions.
Next, I will explain about type of segments. Type of segment can be divided into two categories. The first segment is business segments. It depends on individual product or service or group-related product or service. Versatile Creative Berhad has 5 business segments, which is paper product, plastic product, color separation and printing, grocery, and others. So these are the business segment of Versatile Creative Berhad. As you can see, the largest contribution to revenue actually comes from the grocery segment. Even though it is not the company's main business activity, this shows how the retail and trading division has grown significantly and now play a major role in the group overall performance. Let's move on to geographical segment for Versatile Creative Berhad. First, what is geographical segment? A geographical segment shows a company revenue and asset based on the different location where it operates. For Versatile Creative Berhad, there is 2, which is Malaysia and other countries. So these are the snippet of geographical segment. For this geographical segment, Malaysia has recorded the highest revenue and non-current asset in 2024, far higher than any other region. This confirming that it remains the group core market. In addition, the group states that no single customer contributes to 10% or more of its total revenue, indicating a well-diversified customer base.
Next, let's move on to the key benefits of segmented reporting. For the first point, segmented reporting helps users understand the company's performance more clearly. Under MFRS 8, companies must show the result of each product or service segment. This is helpful because every segment may perform differently. For example, in Versatile Creative's report, the grocery segment earns more than 229 million in revenue, while for paper products and plastic product segments, they earn around 29 million and 11 million respectively. By showing these results separately, users can see which segments are strong and which ones are weaker. This gives a clearer picture of how the company is really doing, instead of just looking at one total number. For the second point, segmented reporting helps users make better decisions. When company provides information by product and by geographical area, users get more detailed and useful information. For example, if one product segment shows strong profit every year, investors may see it as a good area for growth. If certain regions perform better than others, users can understand where the company should focus more. Segment information also helps users spot problems early, like a region or product that is slowing down. Overall, the extra details from segment reporting helps users make smarter and more confident decisions.
Now I'm going to talk about MFRS 134, which deals with reporting for shorter financial periods. To start, this standard explains what companies need to show when they prepare interim reports, which are reports made in the middle of the year, not the full year. These reports help keep everyone updated on how the company is doing. The main idea behind MFRS 134 is to make sure the information is quickly shared and trustworthy, so the public can see the company's ongoing situation and not wait until year-end to know what's happening. In these interim reports, a company must include summarized financial statements like their assets, profits, cash movements, and any important notes that helps explain changes during the period. Another important part of this standard is that companies must use the same methods and rules that they follow in their yearly report. This makes it easier for people to compare the results from one period to another. Overall, MFRS 134 helps show whether a business is performing well, managing its money properly, and staying financially stable throughout the year.
Next is two significant events that happened in Varsity Berhad. So the first one is operational restructuring in Plastic Product Division. The Plastic Product Division report a significant loss of 2.27 million ringgit this quarter. This was primarily a one-time event caused by a strategic relocation of its factory. The move involved writing off obsolete equipment worth 1.11 million ringgit and a 500,000 loss ringgit from selling other assets. While this has negatively impacted short-term results, the relocation to a smaller, more efficient facility is calculated decision. It is expected to substantially reduce future rental and operational costs, with the financial benefit projected to appear in the upcoming quarters. Next, the consolidated revenue for the group shows strong growth, increasing from 86,393 million ringgit in the previous year to 100,777 million ringgit this year. This represents a significant increase of 14,384 million ringgit. This growth was overwhelmingly driven by the grocery division. Its revenue arose from 75,981 million ringgit last year to 92,221 million ringgit this year, an impressive jump of 60,240 million ringgit. This means the grocery division alone contributes more than the group's total revenue growth, and it now constitutes over 91% of the company's total revenue. In conclusion, the data confirms that the grocery division serves as the primary growth engine for Varsity Creative Berhad, fundamentally shaping the company's current financial position.
Next, I'm going to explain the interim reporting periods for Versatile Creative Berhad based on their latest interim financial report. So, for this report, the company is focusing on the first quarter ended 30 June 2025. This is the main current period that all the financial results are based on. To make the numbers meaningful, they compare everything with the same quarter from the previous year, which is 30 June 2024. This comparison appears in the profit or loss statement, the cash flow statement, and the changes in equity. Basically, anything that talks about performance over a period uses these two dates, current period 30 June and 2025, and the comparative period is 30 June 2024. But there's one exception, which is the statement of financial position or the balance sheet. Instead of comparing to June 2024, they compare the current position as at 30 June 2025 with their latest audited year-end, which was 31 March 2024. This is normal because the balance sheet shows the company's position at a specific point in time. So they use the most recent audited date for comparison. Overall, the report is basically comparing how the company performed this quarter versus last year's same quarter, and for the balance sheet, how the company stands now versus the last audited year end.